how to read price on the weekly time frame. Now there's a couple of key points I would like us to look out for when you're reading price on this particular time frame. First one will be PD arrays. Okay, you have to be able to identify all the different types of PD arrays which you can get from the weekly time frame on that structure over there, right? And so it's not going to be a challenge, I feel like, because just as like the monthly, it's quite a it's a big time frame. And so, well, it takes, especially when it comes to PD arrays, it takes quite some time for any kind of relevant PD array to be formed. If you notice, well, let's see, we have things like the auto blocks. Okay, you can identify that. Fair value gaps, right? Yeah, there's one here, another one over there, and that's right here. It's break a block, right? So what is that? You should be able to identify PD arrays on the weekly time frame, and because sometimes that's where price will be at a weekly PD array, and such levels and price areas and price are significant. Okay, take a look at, say, this family gap over here. See how we had price starting off from there after a complete rebalance of that fair value gap. So this is what's going to happen. With the fair value gap, right, the same thing that you spoke about, I've got with regards to fair value gaps, it applies across all the time frames. We either have institutional order flow trail, or consequent encroachment, or a complete rebalance of a fair value gap, just like here, right? Institutional order flow, complete rebalance, and so from here. Right here we have we have institutional order flow trail on this particular fair value gap over here. Okay, and so PD arrays are relevant areas where you might want to look for signs of reversals or continuations. And so the next thing we want to look out for is premium and discount. And so all of this is dependent on the structure, or the current structure that you have, because say at some point when you're around anywhere here, right, it was actually quite easy to get from swing low to swing high and identify your PD and your premium and discount areas, right? And sometimes even last year was pretty easy, as we are consolidating for a long time within this range of price and this high and this low. And so yeah, it was pretty easy to identify premium and discount. But currently, although we are sort of consolidating, price overall generally was going a downtrend. Okay, because it was creating lower lows but not necessarily creating higher high. Well, not necessarily, yeah, leaving some highs untouched. So when price does that, even though it's moving sideways, it's a sure sign that it's just moving lower but sideways. So it's moving lower but slowly. Yeah, lower but slowly. And so times like that, where you don't have swing point to swing low to anchor from, then you may not use premium and discount on the particular at that particular point in time, right? It's on the time frame here. But most of the time, you find that you have a range of price the price is playing within. Because currently now it's just like we're looking at a range from the 2019 low to the 2022, right? Yeah, 2022 high. It's kind of like the range, the major range that we're working within now. Already can tell that we are in discount, right? And we're still bearish nonetheless. Okay. Yeah, premium discount. Okay, so when things are looking or when structure agrees, you use it all the time. It's necessary, it's important. Okay, and what's the other thing when you're reading price? You're gonna look at the drawn liquidity. Okay. Now the drawn liquidity. Now we're talking about. We're gonna talk about essentially because what you use the weekly time frame for is also for directional purposes, right? Directional bias. You just want to have a more general idea, and it's actually gonna be the truest form of direction where price is gonna go to, at the information that you're gonna get on the weekly and monthly. So on the weekly, you need a kind of clear drawn liquidity, and that's where price is going to draw to. Then lower time frames must conform to that, must agree with that. So this high here at the point in time, okay. See how, because all PDRAs, you spoke about PDRAs were green and bullish order flow. So with all those fair value gaps and order blocks are putting price going higher, this is a drawn liquidity. But I don't want to talk about that because I already dealt with all of those price action. I want to deal with where we are currently. Okay, so for the last 2 points here, we're gonna look at want to look at the price action from this year, from January. So what I've done is actually just zoomed in on that area. This is all I have just been, this is how I've been looking at price this whole year. Actually, I just been zoomed in on it, on this, what I feel like it's more relevant. So I just have in my eyes on this area of price, because just from January, price went into a consult sideways, right, movement. And so maybe I think you'll be really interested in knowing how I've been, or how best to read price when it's moving like this, right? It's pretty easy when it's trending and all that, because you use premium and discount and PDRAs and you're good to go. But what about when price is moving sideways? On the, especially on a weekly, on a higher time frame, okay, because the weekly is a higher time frame. What then? What tools do you employ? Well, let's start right from January. Okay, the first thing you see is we have a fair value gap. Okay, we have a fair value gap right there, and I'm going to keep reiterating this: institutional order flow into drill, consequent encroachment, or a complete rebalance of a fair value gap. That's what we're gonna have on any time frame from monthly to 1 minute. Price is either gonna have an institutional order flow into drill, consequent encroachment, or a complete rebalance of a fair value gap. Capiche? Alright. And if you remember from narrative, we could actually when price rebalances a fair value gap, it's most likely to expand towards liquidity. Why is this low sell side liquidity? Because it's a swing low. Why is it a swing low? Because this closed here, so we have a higher low to the left and a higher low to the right. We're swing low here, they sell side liquidity just right there. Oh, pardon me for that. And so, mind you, you realize we are using all of those a couple of concepts together, right? And so yes, you might have that, right, as a narrative that okay, you rebalance a fair value gap, close bearish, most likely they're gonna expand towards liquidity. So on the next week, you're gonna have a bearish bias based on that narrative. And yes, it was bearish and it took out that low. But notice it with the path 3, we open, we go higher, and then we sold off until we passed through the open and went through below the low, and then created the low, and then retraced back inside, and then finally closed right there. Interesting, isn't it? It went higher, reversed, went lower, boom, then came back inside the range and then closed. So with the power of three, it'd be easy for you to tell at this point in time. Or you could actually know that okay, this is just the manipulation phase. Price is just going up to premium on this range. Okay, from the low to the high. Yeah, what? I wonder why I'm taking specifically this low on the side, because well, this will be a swing low on a daily. That's what I'm seeing. Because price came down, created a low, and then went higher. So that on the daily itself tells me that there's probably a daily swing low here. So that swing low and then came into a 5-day gap, created a high and went down. So there's another swing high on the daily. Okay, I can tell much without having to go on the daily time frame. And so yeah, we went up to premium and then sold from there. Now, why within this week? Well, within this week, you know, there's up candles and down candles as well. So that means there could be like an order block right there, because price is gonna find resistance at up candles, and you're gonna find them um on that wick over there. Now we're not really worried about how to sell or when to sell and what not. We're just worried more about, or more concerned with, direction of price. Okay. Uh, I didn't actually speak much on draw liquidity as I was supposed to, but I just thought maybe we could just focus our attention on this here. Okay. Our draw liquidity can be two things anyway. It can just be a fair value gap. It could either be a fair value gap or liquidity pool. That's it. Fair value gap or liquidity pool. Yeah. I don't even need to discuss this much. We've already done teaching on bias and whatnot. So um, let's focus our attention again. Still on reading this. Okay. What tools to employ at this particular point in time? Now, that is after we take out this low, right? We trace back inside and close, right? On the next week, we take out the low here before going higher. Okay, now this is the point where I told you about the last point is I basically, as it said, on the weekly time frame, all you have to do is just look at your charts and just think about where is price most likely to expand to. Is it likely to go higher or is it likely to go lower? Simple as that. You can actually just employ that for the just to for the weekly time frame, for your weekly time frame analysis. Just look at your candle and think, well, you just open a new weekly candle, it is most likely to go for the high or the low. Now that I've expanded that into saying or into looking at it in a way that I use the previous week's high and low, or low, right? I use the previous weekly high and low to say on this new weekly candlestick, is the price most likely take out the previous weekly high or the previous weekly low, right? This is why I would usually mark out a previous weekly candlestick like this. Okay, so if I mark out the high and the low, then when the new one opens, all I'm just saying is it, are we more like, are we most, is it more not really, is it gonna expand to the low and maybe close bearish, or is it gonna expand to the high and close bullish? Now it's even much more easier for me now because I use the weekly power of 3, that is the H4 time frame. So it's easier for me to tell because I have some more information on the H4 time frame as opposed to just looking at just the weekly candlesticks. Okay, but looking at the weekly candlesticks is also quite helpful when you use the power of 3, the open, high, low, closed, right? Because now you can tell here that okay, the first price took out the low, came back inside and then like expanded higher, right? Created a high and then closed. What happened is this: is that right there, just below that low there was a reversal. Okay, there was a reversal. Now this is the kind of the trick or the hack that I've found and I've been using for quite a while. And this is why I emphasize so much about the weekly power of 3, and this is why usually when you see me marking out my premium discount on the weekly power of 3, that is the H4 time frame, that's always taken from the high and low, previous week, the high and low. It's always like my emphasis. It's always what the narrow draw that, yeah, I look out for. Reversals, I love this type of reversals where we take previous week the high and then go the opposite direction. Oh, I love them so very much. I mean, this is not the first one. If you look back, you're gonna see this one here, right? So remember how the power of 3 works. Open, low, high, close works. Open, high, low, close, actually, for bearish candlestick. So price opened, went high, took up previous weekly low, thought it was also rebalanced and fairly gap, right? But if you're gonna look at it as previous weekly high, previous weekly low, is that we took out this high, then reversed and went the opposite direction to the low. And then we took out the low here, of course, then we traced back inside, but then the next week we take out this low. So 1 2 3, that's the 3 drive pattern. So took out a low, reversed, went higher, and the next week it was a continuation until we took out this week's candle, this high, right? So we took out the high, then we took out the low, took out the low, then we took out the high. And then guess what, the same thing is just happening here with the 3 drive pattern we have right there on the next week. Golly, nice one. So what we take out the high, then we take out the low. It's pretty much a back and forth type of scenario. Essentially, especially when it's prices moving sideways like this, boy, you would enjoy this market. I'm telling you, you will definitely enjoy them. So I've used that as kind of like so this is how it is. You're either trading the reversal or the retracement when if you just look out for this, okay, if you want to make things even easier for yourself, you can just wait on price and only take setups that form after a sweep of the high or low on the weekly time frame. And I'm telling you, you will catch massive reversals. I'm telling you this. This is one of the secrets, or this is one of what I have been using to trade to take my swing trades. Okay, swinging. So swinging, um usually it's when you involved weekly levels like this, um you'll get those nice reversals. And well, trading consolidations on the weekly time frame is easy for me because of this fact, because this is the only thing price does. You see how there's no fair value gaps in this whole time, right? This whole time there's no fair value gaps in price. All price is doing is just taking out the highs and lows, highs and lows, highs and lows, highs and lows. That's all it is doing, really. That's what it is doing. Like the most significant reversals is after price is taking out the high or the low of a weekly candlestick. Of course, you do have to go and backtest that, but for now, this is what been happening since January, right? Then we go in the opposite direction. Now, with regards, right, if you combine this with other time frames, because that's essentially what we're gonna do. We're always gonna combine with other time frames, essentially weekly and daily and 4 hour, because of the 4 hour is also where you're getting your weekly power tree, right? So sometimes we're gonna get in this moves, or we want to be able to tell that there's a range and prices and discount, and they say like a discount array on the daily time frame, like a bullish order block here, then price so sells and then taps into that daily P array, then goes opposite direction and closes. So you're going to catch those as well, those kind of trades as well, but on the weekly time frame, this is all you're going to be doing, right? You make things easier for yourself just looking out for previous weekly low and previous weekly high. Sometimes you're going to have an inside candle like this, but as you see, it kind of actually tapped into this the order block here, right? Even though it did not close below the low here, it appears to be an order block nonetheless. tap into that, and then boom, we sell from there and then close, right? And then on the next one here, when price opens, it takes out all this. It actually takes out external range liquidity. And mind you, in the consolidation, there's a couple of things, right, that we employ with regards to how price moves. But in the consolidation, we have we say that price is trading within a range. That means it's trading within a high and a low. Now, the high and low is always going to be, you're always going to refer them as your external range liquidities. Okay, the high and the low. And as if price is not breaking out of the range, then it's always going to return back inside the range, even after it takes out the external range liquidities. I'll say that again. If price has no intention of coming out of the range, then it will always return back inside the range after taking out the external range liquidities. Okay, and so take out external range liquidity, back inside the range. Okay, back inside the range from swing high to swing low. Again, all this is going to be clear on the daily. Price is just coming back to premium, and in premium in this week here, there's up candles and down candles, so there must be a bearish PDRE over there. Okay, inside this there must be a bearish period that price reacts to it. And well, I don't need to check. I just know that, well, at the point in time, if I was using or if I was employing the daily time frame as well, I would be able to maybe tell some, there will be more information for me to tell whether to look for bearish prices, to look for bearish reversal or not, right? But nonetheless, the fact price, although it's expanding to external range liquidity again, I want you to recognize that it was after this again, another one, right? I'm telling you, at these junctions in price, these are the times where you get to enjoy price really, really well. Okay, even this one here, a nice reversal occurred. Like the reversal I'm talking about, reversal patterns, usually the way price reverses, right? Mind you that the reversal patterns are also the same as the or the foundation for the breaker block and the mitigation block. Okay, so when you see a breaker block forming, it also denotes a reversal, because that means the reversal pattern is formed. The stop hand reversal pattern is formed. When it forms, there's a breaker, right? On the failure swing, the reversal pattern forms, there's a mitigation block. So if there's a reversal, boom, then there's also a way you also use the things that you know, things like about order flow. When order flow changes, when you have a shift in structure, when you're now moving from bearish, what do you call it, a bearish order flow to a bullish order flow, that means then in the bullish order flow you're gonna see bullish period support in price. So that means that even if you don't get or you miss the trade on the breaker or on the mitigation block, you can still enter or every other bullish period array, right? That is I guess in discount, right? Then remind you again that this is a weekly time frame. Every time where we see all these reversals in price, there's a swing pattern on the daily. So there's a swing pattern on the daily, right? There's so much opportunities, man. So there's a swing pattern on the daily here. There's a swing pattern on the daily here. Not necessarily here. I think possibly it was at the end of the week, but here, right, where there's a significant reversal, there's a swing pattern over there. There's swing pattern over here, there's swing pattern over there, swing pattern over there, swing pattern over there, swing pattern over there, on and on and on and on, right? But if there's anything you should get from this video, is keep it simple, right? Is price gonna expand higher or lower? It's all you gotta ask. It's all you gotta answer. And all you have to do is just have previous weekly high and previous weekly low. and how you're best gonna make that decision, or that how you're best gonna come up with that answer. You're gonna use this in conjunction with the lower time frame, the daily and the 4 hour. Now, why I say the daily, the 4 hour is just much more relevant because it's the weekly power of three, right? You have your weekly open, and well, you could tell. Sometimes you can tell when price is in a manipulation phase much more clear, and you can enter even on those, or you can find a setup on that 4 hour on a 4 hour PDRE. So it really just gives much more information to the weekly path 3. But the daily is also helpful too, in the sense that swing lows and swing highs on the daily means something, right? Like I said before, a swing high or swing low just means price is reversing, or it's a turning point. So if price is turning, that means it's reversing. So now it's going to go in a different direction. So daily, you're just going to be looking for that. And I've said previously that uh, there's a swing. There's a swing almost every week. If there's a swing every week, then there's a swing pattern every week. There's a swing pattern every week. You have a trade every week. If you only just get one trade, you're good to go. You're good to go. All right. So I hope this was insightful. Keep out for the next video.